Have you ever heard of the phrase, "the trend is your friend," when trading or investing? Sure you have. Of course, most profits are generated when markets are trending, but I have to disagree with this quote. The correct phrase is "the trend is your friend" if it can be found. If you cannot tell if a market is trending or not, the trend has no use to you. You cannot profit from it. There are many ways that can help you to spot a trend, and one of the best approaches is with Heikin Ashi candlesticks. So today we'll talk about Heikin Ashi charts. You'll discover the importance of adding them into your trading arsenal, and you'll learn how to use them correctly and to stay on the right side of the market. Before we continue, if you are new here, make sure you subscribe, turn on the notifications, and leave us a like to show your support. So, Heikin Ashi is a Japanese technique based on the candlestick theory, but taking it to a higher level for trend determination. Heikin means average and Ashi means pace. Taken together, Heikin Ashi represents the average pace of prices. A Heikin Ashi chart looks like the classic candlestick chart, but the method of calculating and plotting the candlesticks on the Heikin Ashi chart is different from the regular candlestick chart. On the candlestick charts, each candlestick is independent and has no relationship with the previous or the next candlestick. But Heikin Ashi candlesticks are different, and each candlestick is calculated and plotted using some information from the previous candlesticks. The open price in a Heikin Ashi candlestick is the average of the open and close price of the previous candlestick. The close price in a Heikin Ashi candlestick is the average of the open, close, high, and low prices. The high price in a Heikin Ashi candlestick is chosen from one of the high, open, and close price of which has the highest value. And the low price in a Heikin Ashi candlestick is chosen from one of the low, open, and close price of which has the lowest value. The major difference between Heikin Ashi and a regular candlestick chart is the way up candles and down candles are formed. In order for an up candle to form on a traditional candlestick chart, the closing price must be above the opening price, and a down candle forms when the closing price is below the opening price. In a Heikin Ashi chart, an up candle forms when the price closes above the midpoint of the prior candle, and a down candle forms when the price closes below the midpoint of the prior candle. This important difference is why Heikin Ashi charts make it easier to spot the current trends. So, candlesticks in a Heikin Ashi chart are related to each other because the open price of each candlestick is calculated using the previous candlestick's close and open prices. Also, the high and low prices of each candlestick is determined by previous candlestick, so a Heikin Ashi chart is slower than a candlestick chart and its signals are delayed. They work somehow like a moving average. When reading these candlestick charts, there are a few important things to pay attention to. The size of the candlestick, the relative direction of the candlestick, and even the color of the candlestick, red versus green, can all help traders draw conclusions about what trends may be occurring. The charts themselves can be easily adjusted depending on the desired time frame used by each trader. 5-minute, 15-minute, hourly, and daily Heikin Ashi candlesticks are among the most commonly used. When the market is bullish, Heikin Ashi candlesticks have big bodies and long upper shadows, but no lower shadow. Pay attention at the big trend in this chart. As you can see, almost all of the candlesticks have big bodies, long upper shadows, and no lower shadow. At first glance, the bullish Heikin Ashi trend looks like a normal Japanese candlestick trend. However, you will notice that the Heikin Ashi trend is built primarily by bullish candles and is absent of lower candle wicks. When the price is shooting up, the price action creates very little to no lower shadows. When the market is bearish, Heikin Ashi candlesticks have big bodies and long lower shadows, but no upper shadow. So here is a big downtrend, and as you can see, almost all of the candlesticks have big bodies, long lower shadows, and no upper wicks. This indicates that the declining momentum is very strong. Reversal candlesticks in Heikin Ashi chart look like regular doji candlesticks. They have no or very small bodies, but long upper and lower shadows. The doji, when it appears after a directional move, has a reversal potential and indicates that the price action is stalling and might be poised to start a counter-trend move. So, in short, how do you analyze a Heikin Ashi chart? It's simple. When prices are trending up, Heikin Ashi bars have no lower shadow. When prices are trending down, Heikin Ashi bars have no upper shadow, and doji bars with both lower and upper shadows are possible turning points and can also appear during choppy price action. Now, Heikin Ashi chart is much smoother looking in terms of price action, easier to identify trends and profit from it. But the problem is that Heikin Ashi candles do not show true prices. Yes, we derive these candlesticks from true prices, but we need to treat it as more of an indicator than a price chart itself. So that's why it's very important to highlight the pros and the cons of using Heikin Ashi. There are a few benefits to the Heikin Ashi chart that can be seen immediately. The first is the smoothness. The Heikin Ashi chart creates a much smoother flow of price movement without the gaps and choppy movements typical price action can make. Heikin Ashi indicator compared to the regular price chart slows down the speed of the market, eliminating unnecessary false signals. Also, it's easy to read trends. The size, direction, and the color of the Heikin Ashi candlestick will tell you a lot about the trend in a short amount of time. This is extremely valuable for day traders who need to make quick decisions. Another advantage of Heikin Ashi is the fact that it will allow you to stay in a trade without being nervous or making any unnecessary moves. Also, the adaptability is another benefit. The trading period of Heikin Ashi charts can be easily adjusted to reflect different time periods. Some traders will look at the 15-minute and the daily charts side by side in order to develop a more comprehensive analysis. These charts can also be applied in many different markets, including stocks, forex, indexes, or various others. However, a Heikin Ashi chart has some disadvantages. Every indicator that is based on slowing down the signals does its best on trends only. Heikin Ashi smoothed signals don't let you to notice the reversal in time. Any Heikin Ashi strategy should take into consideration that lagging indicators not only dismiss useless signals to open the trade, but also provide you with late signal for closing the trade. This is why you will often see the market slowly destroying your profit, and later on you will understand that the trend has already changed. In other words, don't rely too much on Heikin Ashi when you want to take your profits. Another important drawback is the fact that this indicator does not fit short-term and scalping strategies. I've talked with many traders that used Heikin Ashi on the 1-minute and the 5-minute charts, trying to scalp the market, and all of them were disappointed. So short-term trading could be inefficient when using Heikin Ashi. Developing a Heikin Ashi trading strategy is surprisingly easy. These charts rarely contradict other technical indicators, rather they simply amplify the trend to make it easier to identify. When used correctly, Heikin Ashi charts are incredibly reliable. If your goal is to catch longer and persistent trends, then using a Heikin Ashi chart will help you toward that end. A simple way to use Heikin Ashi is to add them to the 4-hour or on the daily chart and apply price action rules. On higher time frames like the 4-hour or on the daily chart, The Heikin Ashi trading style puts an emphasis on persistent trends. Small corrections and consolidations are left behind, and they are barely visible on the chart. You will notice that when the direction changes on a Heikin Ashi graph, the price most likely starts a new move. This helps to distinguish between the potential beginning and the end of a trend. Since chart noise is filtered, you basically trade a naked trend. Heikin Ashi charting is very powerful when combined with price action analysis. Look for the emergence of new trends or for the reversal of already existing ones. Look for support and resistance levels and important swing points, and keep in mind that this could act as future turning points on the chart. Now, if you found value and learned something new, make sure you subscribe to our channel, turn on the notifications so you don't miss future uploads, and leave us a like to show your support. Until next time.